Hi again, it's James from Healey Kia with another weekly credit tip, courtesy of iPreCheck. iPreCheck is a great way to obtain your free credit score and buying power without the need of your social security number and without affecting your credit. So today we're going to talk about how lenders rate your level of risk when you're obtaining an auto loan, or any loan for that matter. We have three great programs here at Healey Kia. First one is our first-time buyer program, which is someone who's looking for their first substantial loan. Our reestablished program is when somebody has had credit in the past, but maybe has had some hiccups along the way. And then we have our established program. So today we're going to talk about our reestablished program, which is truly what we're the best at in the Hudson Valley. And we use an acronym to be able to follow this really simply with our customers so that you as a client understand exactly what the lender is looking for. So the acronym we use is SWAT. So the first S, real simply, is stability. And the stability is in reference to your residence and also your current employment. 5 years is the number that banks use typically to remove all of that risk, meaning if you live at the same address for 5 years, you're at the lowest level of risk. If you've been at the same job for 5 years or more, you'd be the lowest level of risk. Depending on how long you've been, less than that is depending on what level of risk you are. Willingness to contribute is really one of the major components of this, and the willingness to contribute just basically states what are you willing to put down toward the loan? What kind of down payment are you coming up with in order to reduce the amount of loan? And the number is 30% to remove all risk from most lenders. So for example, if you're looking at a $15,000 vehicle, putting down $4,000 or $5,000 would be that 30% that would remove all risk to the lender, giving you the best possible terms available. Now, of course, everybody doesn't have 30% down. And of course, we have lenders that will be able to help you accordingly. Ability to pay is important because that's how you're being paid by your employer. You're being paid either hourly or possibly salary. Are you paid the same amount every week, which is salary or hourly? And an hourly employee may be a little bit higher risk than a salary employee. Again, each lender is different. They're also going to look at, are you paid traditionally on a pay stub with taxes and such being taken out each week, or are you an independent contractor receiving a 1099? A 1099 employee may be looked upon at a higher risk level. The last is track record, which is your credit report and also your track record of payments over the course of time. They look at your past and also your present, and they'll take a look at how those things are going and what level of risk you are. Now, each one of these items is very important. They all have a different weight to them. They're all important, but just because, for example, you have a lower credit score doesn't mean that you can't get great financing terms. Depending on your down payment, depending on your time at residence, depending on your time at employer. All of these things can make up for a few hiccups in your credit. So your next step here is to go onto Healey Kia and click the iPreCheck button. It's time to get your free credit score and your free buying power without the use of your social security number and without affecting your credit. We look forward to seeing you next week for the next credit tip. Thanks so much.